In 1965, a 22-year-old engineering graduate from Hunter College named Lee Cooperman took a job as a quality control engineer at Xerox. He was the son of a Polish immigrant plumber, had grown up in a one-bedroom apartment in the South Bronx, and had paid for his Hunter College education through a combination of part-time jobs that ranged from fruit packaging to theater ushering. The Xerox job was a respectable starting position for a young man with his background. It was also, within months of his starting it, clear to Cooperman that engineering was not what he wanted to do with his life. He took a leave of absence from Xerox to attend Columbia Business School, where he completed his MBA in 1967. 2 days after his Columbia graduation, he reported for work at Goldman Sachs. He had no Wall Street family connections. He had no prep school background. He was, by the standards of mid-century investment banking recruitment, an unusual candidate for the firm. Goldman hired him into the investment research department, where he would spend the first 22 years of his career. What followed across the next quarter-century is one of the more remarkable career arcs in the history of Wall Street. Cooperman rose from a junior research analyst at Goldman in 1967 to become, by 1989, the founding chairman and chief executive officer of Goldman Sachs Asset Management. Along the way, he was voted the #1 portfolio strategist in the Institutional Investor All-America Research Team survey for 9 consecutive years, from 1977 through 1985. At the end of 1991, after 25 years at Goldman, Cooperman retired from his positions as a general partner of the firm and as chairman and chief executive officer of GSAM. The very next day, he founded Omega Advisors, with capital that came primarily from his accumulated Goldman partnership profits. The fund grew, at its peak, to manage more than $10 billion on behalf of institutional and high-net-worth clients. Cooperman ran Omega for 27 years before converting the structure to a family office at the end of 2018. This is the story of Lee Cooperman, the founder of Omega Advisors, and what his career means for working traders. Lee Cooperman was born on April 25, 1943, in the South Bronx, the son of Polish-Jewish immigrants. His father worked as a plumber. The family lived in a one-bedroom apartment. The household was working class in a way that gave Cooperman, throughout his subsequent career, an unusually direct understanding of the gap between the financial world he would eventually operate in and the economic conditions of most American families. He attended Hunter College, paying for his education through part-time work that ranged from fruit packaging to theater ushering. After Hunter, Cooperman took a job as a quality control engineer at Xerox in 1965. Within months of starting at Xerox, he had decided that he wanted to pursue investment research as a career rather than continue in engineering. He took a leave of absence from Xerox and applied to Columbia Business School, where he was admitted for the 1965 academic year. Cooperman's Columbia MBA was completed in 1967. The Columbia Business School of the late 1960s was, even then, the leading academic institution for value investing in the United States. The curriculum drew directly from the intellectual lineage of Benjamin Graham and David Dodd. The analytical framework Cooperman absorbed at Columbia focused on rigorous fundamental research and on the relationship between market price and underlying business value would inform his work at Goldman, at Omega, and through the rest of his career. Cooperman's first 22 years at Goldman were spent in the investment research department. He rose from junior analyst to senior analyst, then to partner in charge of research, then to co-chairman of the firm's investment policy committee and chairman of the stock selection committee. The trajectory was unusually fast, even by Goldman standards. By the late 1970s, he was widely regarded as one of the most analytically sophisticated equity strategists on Wall Street. The single most consequential professional recognition of the Goldman research years was Cooperman's 9 consecutive top rankings in the Institutional Investor All-America Research Team Survey for portfolio strategy. The All-America rankings are based on direct surveys of institutional investors who rate the analytical quality, the timeliness, and the practical usefulness of sell-side research. The portfolio strategy category, which Cooperman won from 1977 through 1985, is the most prestigious of the categories because it requires not just deep analytical capability, but also the capacity to integrate macroeconomic analysis, sector allocation decisions, and stock selection into a coherent investment framework. 9 consecutive number 1 rankings in the same category is, statistically, an unusual achievement. The category turnover rate is normally substantial because the underlying analytical demands change as market conditions evolve. Cooperman's sustained performance across the period reflected an analytical framework that was robust to varying market environments. Rigorous fundamental research on individual companies. Macroeconomic analysis that informed sector allocation rather than predicting precise market moves. Disciplined attention to the relationship between current market valuations and historical norms. In 1989, Cooperman was named the founding chairman and chief executive officer of Goldman Sachs Asset Management. The transition reflected the firm's recognition that the asset management business required analytical leadership that combined the strategist mindset of the research department with the operational discipline of running an active investment management business. The 2.5 years he spent leading GSAM gave him the operational experience of running an active investment management business at institutional scale, which would inform his approach when he founded Omega 2 years later. At the end of 1991, after 25 years of service, Cooperman retired from his positions at Goldman. The very next day, he founded Omega Advisors. The capital that funded Omega came primarily from Cooperman's accumulated Goldman partnership profits, which had grown substantially over his 15 years as a partner. Omega's investment framework was, in its essential elements, the same framework Cooperman had been applying throughout his Goldman research career. Bottom-up fundamental research on individual companies. Sector allocation decisions informed by macroeconomic analysis. Disciplined attention to valuation relative to historical norms. The structural difference at Omega was the operational latitude to take concentrated positions in highest conviction ideas without the institutional constraints that limited position sizing at GSAM. The Omega track record over the 27 years of operation was strong. The fund compounded capital at approximately 12.5% net annual returns, modestly above the S&P 500 over the same period. The performance was not as dramatic as the highest returning hedge funds of the era, but it was consistent. Omega beat the S&P 500 in most years of its operation, and the consistency of the performance allowed the firm to grow assets under management to more than $10 billion at peak. Cooperman's investment framework rests on a small number of principles. Bottom-up research drives position selection. Cooperman has consistently emphasized that individual company analysis is the foundation of his investment process. The macroeconomic overlay informs sector allocation decisions, but specific positions are taken based on detailed analytical work on individual companies. Macroeconomic predictions are subject to too many variables to be consistently accurate. Company analysis can be more rigorous because the underlying questions are more bounded. Macro analysis informs allocation, not prediction. Cooperman has frequently said that he tries to predict market direction, but pays close attention to market valuations. The macroeconomic analysis is intended to inform sector allocation decisions, not to predict precise market moves. The valuation analysis is intended to identify when broad market conditions create attractive entry points for individual positions, not to time the market. Concentration where conviction is highest. Omega's positions were concentrated, not diversified. The largest holdings typically represented 5 to 10% of the fund's capital, sometimes more. Cooperman has consistently argued that the analytical work required to develop high conviction in an investment is substantial, and that the work is wasted if the position is sized too small to matter to overall returns. Patience for the thesis to play out. Cooperman has consistently held positions for extended periods, often through multiple years of fluctuating market conditions, when the underlying analytical thesis remained valid. The Cooperman framework requires the temperamental capacity to hold positions through periods of being apparently wrong if the analysis is unchanged. In September 2016, the U.S. Securities and Exchange Commission filed civil insider trading charges against Cooperman and Omega Advisors. The SEC alleged that Cooperman had traded in the securities of Atlas Pipeline Partners on the basis of material non-public information. Cooperman publicly disputed the SEC's characterization of the events and announced his intention to fight the charges in court. In May 2017, the SEC and Cooperman reached a settlement. Cooperman agreed to pay a $4.9 million penalty, neither admitting nor denying the SEC's allegations. At the end of 2018, Cooperman announced that Omega Advisors would convert from a hedge fund managing outside capital into a family office managing only Cooperman's personal wealth. The decision was structural rather than reactive. Cooperman cited his age, his lack of interest in continuing to chase the S&P 500 index every year, and his desire to focus the remaining years of his active life on philanthropic activities and on guiding the next generation of family members in financial decisions. Cooperman has been one of the most prominent signatories of the Giving Pledge. He has stated publicly that he intends to give away substantially all of his wealth, leaving only modest amounts for his children. His philanthropic commitments span medical research, educational scholarships, Jewish causes, and various civic initiatives in New York and New Jersey. The philanthropic philosophy is connected to the biographical foundation. Cooperman grew up in a working-class Bronx household where there was no inheritance to receive and no expectation that any would be passed down. What Cooperman means for working traders maps onto mind, method, money in ways that translate directly to retail traders. Mind. Develop the analytical confidence to act on bottom-up research even when prevailing market conditions appear to disagree. Cooperman built his career on the conviction that detailed company analysis produces more reliable insights than macro-level predictions. The temperamental capacity to operate on conviction rather than consensus is one of the structural features that distinguishes the Cooperman framework. Method. Combine bottom-up research with macroeconomic-informed allocation. Cooperman's framework was not pure stock picking, and it was not pure macro forecasting. It was the integration of detailed company analysis with the macroeconomic context that determines whether sector allocation should favor the analyzed positions. Money. Concentrate where conviction is highest, but maintain analytical discipline rather than emotional commitment. Omega's positions were concentrated, but not religious. When Cooperman's analysis indicated that an underlying thesis had been invalidated, he closed positions even when he had previously been publicly committed to them. Leon Cooperman is now in his early 80s. He continues to operate Omega Family Office, manages a personal portfolio of approximately $3 to $5 billion, and has expanded his public role through frequent television appearances, board positions, and the implementation of his Giving Pledge commitments. The 52-year arc, 25 years at Goldman plus 27 years at Omega, stands as one of the longer continuous careers in modern investment management. The most underappreciated feature of Cooperman's career may be the consistency of the framework across the 52-year arc. The principles he applied as a junior research analyst at Goldman in 1967 are the same principles he applied as the founder of Omega in 1991, and the same principles he has continued to apply through his family office in the years since 2018. In his own words, quote, "I'm a disciple of Warren Buffett. I think he's the best investor of all time." That was Lee Cooperman. This was episode 28 of The Greatest Traders. I'm your host. Thank you for listening.